Lee from Bell Direct. And Julia, the Aussie share market saw the profit takers move in.
Bridie, we've been watching that 4,800 point level for a while now on the ASX 200, and it's significant because earlier on in the session we saw the market reach above 4,800 points for a few minutes, but then it was too much and we saw the profit takers come in, and for the rest of the session we did see a sell-off. So you could say that this sell-off was very technical in nature today. We did see the Australian market down by 0.3%, but it is following a very stellar week of performance on the Australian market where we saw a gain of 3.3%. In particular, it was our majors which led the gains this week. We saw the material sectors up by a massive 5.4%. We also saw the financial sector rising 4.4%. On our market today, it was the healthcare sector which was the worst performing sector. We saw CSL down by 2.7%. That was after Citi downgraded the stock on the back of FX movements as well as the supply in the blood plasma market at the moment. The property sector also coming under pressure, and this is a sector which is prone to sensitivity towards interest rate hikes. So we did see a bad session by the property sector, but we saw Breville rising 39.3%. That was on the back of a takeover offer from GUD Holdings. So although we saw the Australian share market down by 0.3%, part of it was because we tested that crucial 4,800 point mark and profit takers coming in, but also because we've seen an extremely good week where the market has risen 3.3%.
Another big move that we saw was Challenger Financial shares reaching that 20-month high. What was behind that?
We did see Challenger shares doing extremely well today. The company came out to say that it is poised for growth, whether it's through organically or through takeovers. Now, the last acquisition that Challenger Financial Group made was for AXA Asia's annuity book worth $1.3 billion, which was back in 2008. So we did see Challenger shares doing extremely well on the back of that announcement. It's got about $530 million over the regulatory requirements in terms of its life business at the moment, and as at the 30th of June this year, we saw it having a holding of about $900 million in cash. The shares are up about 83% in the year to date, so having a good 2009 so far. Today rising an extra 4.4%. It wasn't just Challenger which was having a good day though. We also saw AXA as well as AMP rising 4.9% today.
Yes, some big moves there. And the Aussie dollar, of course, big moves all week. It has just pulled back late in trade today. But that high Aussie dollar, what's it expected to do to earnings?
We're on track for the best weekly gain for the Aussie dollar since May. We've seen the Aussie dollar now, if we have a look at the 52-week chart, we've seen the Aussie dollar rise 30% in 2009 so far. In the new financial year, we've seen a rise of 12%. Now, the very high Aussie dollar is great news for importers, but not so good for exporters. So a lot of Australian companies make their earnings offshore now, and that would be bad news. So some of the building products companies like James Hardie as well as CSR, it would be bad news for, as well as some of the commodity-based companies and the resource companies. Although BHP Billiton and Rio Tinto would not only have hedging in place, but also be offset by the higher moves in commodity prices. While we've seen the Australian dollar move up 30% in the year to date so far, we've seen copper prices rise by more than 100%. On the flip side, the very high Aussie dollar would be great news for importers. In fact, retailers would be doing quite well out of the very high Aussie dollar. So good news for companies like David Jones as well as Harvey Norman. But seeing that the Aussie dollar is now at 14-month highs, it is a consideration because that high Aussie dollar is going to eat into the bottom line of exporters.
Julia Lee, Bell Direct, we do appreciate your time as always. We'll chat to you again next week. Have a good weekend.
You too. Thanks, Bridie.